When you're looking at buying a business, the numbers that you get shown aren't necessarily facts. They're a story. And that story is told by the people who are incentivized to make the business look as appealing as possible. If you misinterpret the story and also miss looking at the numbers in detail, then you're the one who ends up paying. In the next few minutes, I'll show you exactly how you can figure out if the seller's figures are true, what to correlate them against, and how successful buyers end up verifying the information that gets shown to them. If you get this wrong and you don't do this, it's very likely you're going to overpay considerably for this business. The first thing you want to understand is how the information comes to you, because it passes through a few different stages. And the first stage is to sell, not inform. You get information provided to you in an IM, which is an information memorandum. It's a watered down view of the business. Sometimes it'll have excerpts of the P&L, the balance sheet, but often it's just management accounts dropped into a grid prepared by the broker or the seller. You'll see things like revenue, cost of goods, gross profit, operating expenses, EBITDA, SDE, and whatever other figures the broker or seller are using to show you how much the business makes. Now that grid isn't necessarily the truth, but it's the starting point. The job of financial due diligence is to figure out if these numbers are true. There's only one way to do this. You correlate it between sources of information that cannot be manipulated. What you want to do is take the revenue claimed and match it against what's in the bank statements. You also want to look at the tax filings, so the GST returns and the end of year financial statements, and also cross-reference this against any CRM tool that the business currently uses. What you're trying to do is match the money that they claim has come in against what's hit the bank account and then what's been declared to the tax authorities. Now, I'm not trying to say that people are trying to lie to you. What I am saying is people present the best version of the business to the seller to encourage them to go ahead and purchase the business. Because you're relying on this information as a buyer, you also want to be across whether or not they've made any mistakes themselves. Because whether or not it's a mistake or if it's done intentionally, you as the buyer get left with the business at the end of the day. Once the transaction's done, the transaction is done. Now you want to be honest with yourself about this. Is this something that you can actually do? If you don't know how to do this, or if you feel like the financial element of due diligence just sits outside of your scope of competence, then you really want to look at getting an accountant or another professional to help you through this process. Experts can go through this for you. They can do exactly what I've just told you. Take the bank statements, look at the transactions, match it against the sales reports and also the tax returns. No matter what you do, don't take the reports handed to you at face value. You have to check them. Now, real quick, email 18 of my 21-day How to Buy a Business course covers exactly the process that you can go through when it comes to financial due diligence. If you want it, the link is down below in the comments. A couple of years ago, I met two young guys who were trying to buy a food-based business, which was actually part of a wider group of food companies. The numbers that they were initially shown were really strong, and they made an offer which was accepted, and then they started going through the due diligence process. Now, what was shocking was they took the bank statements and the sales data, and they couldn't actually find about $100,000 worth of sales in the business that were reported. It couldn't be tracked, so there was no way to be absolutely certain that this business made the amount of money that the owners said it was making. Now, imagine someone who doesn't go through this process and still buys the business. The numbers get taken at face value. They expect over $100,000 of sales to show up that never does, and there's no spare income to pay the debt or pay themselves. The whole deal goes underwater. It's a very difficult position to get out of and a really hard business to sell again. So what I want you to leave with is just know that the numbers given to you in the IM is just the start, and there is a process for you to go through to make sure that you can verify everything that you've been shown is true. If you can't do a quality of earnings report yourself, then get an accountant or a professional to do this for you. If you want frameworks like this, which I've learned from 12 real acquisitions, then I want you to subscribe. Every week I create videos like this to empower buyers to understand the process and what they're getting themselves into when it comes to buying their first business. If you have a deal, then I want you to find the link below for the Bring Your Deal session, book it, and let's break down one of your deals together.